But during the financial year, you still need to buy in more stock in order for you not to disappoint your customers as units. And then we sold 3,050 units. So how many units are we supposed to have as our closing stock? The units of our 239,300. There is your gross profit. All right. Good morning, good afternoon, good evening, wherever you are watching from. Here is Ma'am Tutu. I will be your tutor for accounting. Basically, today we are looking at the grade 12, paper 2. And the first topic we want to consider here is stock, or what we call inventory valuation. Stock or inventory valuation. What is inventory? Inventory simply means the trading stock that a business buys in order for them to resell, for the business to make profit. Inventory happens to be the least liquid asset in the current asset. It happens to be the least liquid current asset. Why do we say inventory is the least liquid current asset? Because it takes you time, energy, and effort for you to be able to turn your inventory into cash. Sometimes you have to go as far as having promotion or making advertisement or giving discount in order for you to be able to change your inventory to cash. And sometimes your inventory could even change to debtor. That is, when people comes to your business and buys the goods on credit. So because of this, it is very, very necessary that a business would do a valuation of its inventory time per time. Every time it is good for a business to go through its inventory valuation. And that is what brings about the topic stock or inventory valuation. Considering this topic, there are some keywords that you need to be familiar with. You need to familiarize yourself with this keyword as an accounting student. And this word include opening stock. The first one is opening stock. What is opening stock? These are the goods that we start the year with. Remember, our financial year takes 12 months, and our 12 months can start at any time of the year. So the stock you start the financial year with, that is your opening stock. Mind you, your closing stock for last year becomes your opening stock for this year. And remember, as a business, your opening stock will not be enough for you to sell throughout the year. Therefore, you need to buy in more stock. And that is what leads to purchases of stock. Purchases of stock. These are the amount of trading stock that you purchase during the financial year. Remember, there is a stock that comes into the year with you, and that is the opening stock. But during the financial year, you still need to buy in more stock in order for you not to disappoint your customers as a business. So the amount of stock you buy into the business during the financial year is what we call the purchase of stock. Then we talk about carriage on purchases. Obviously, you are buying stock from your suppliers. And your suppliers, for example, let's say my business is in Joburg and my supplier happens to be in Pretoria. It means I have to go to Pretoria, buy the goods from my supplier, and then transport the goods from the supplying point to into my business where I am going to be selling the goods. So the amount of money I use to carry the goods from my supplier into the point of sale is what we call carriage on purchases. And your carriage on purchases is a cost that you must place on your inventory. Then also, the next one we are looking at is custom or import duties. For example, if the goods we are selling here, if they are imported, meaning international goods, it means we have to pay custom or import duties on that goods, and such an amount will also be charged on your inventory. Then another one we want to look at is return on stock. This is when we return goods back to our suppliers. It could be as a result of damage or wrong type of goods, or as a result of an overcast of what? Of goods. So we return back to our suppliers, meaning the goods we return back to our suppliers is no more in our care. So such goods will no longer be available for sales. Then finally, you need to know what we call closing stock. Obviously, as a business, you are not to sell all your goods at the end of the year. At the end of the year, there should still be some stock that will be in your business. So the amount of stock that you end the financial year with is what we call closing stock. Remember, the closing stock for this year becomes your opening stock for next year. So as an accounting student studying inventory valuation, you should familiarize yourself with all of these terms. And then the next thing I want to take you through very quickly is the system of stock valuation. The system of stock valuation. Now we have two system of stock valuation. For this level, we look at two systems. And the first one is perpetual inventory system, while the second one is periodic inventory system. Perpetual inventory system and periodic inventory system. When you hear the word perpetual, it means continuous. If you say somebody is a perpetually do something or have an habit, it means that person does that thing regularly. So from that point of view, we look at perpetual inventory system. It is an account, it is a system whereby the movement of inventory is what is continuously monitored. We monitor the movement of our inventory. One peculiar thing about perpetual inventory system is that we usually calculate our cost of sales immediately after sales. It is easy for us to calculate the cost of sales immediately after sales. We do that regularly, and then we record and we monitor the movement of our stock. Even it involves the use of what? Point of sales recording system, the scanning system. You find out that we use that a lot when it comes to the perpetual inventory system. And what are the advantages of this system? This system is very accurate and realistic. It is very, very accurate and realistic because each time you sell, you are able to know the cost of the goods that you have sold, and then you are able to monitor how many goods will be remaining in the business, which will eventually form your closing stock. It also, stock on hand is available in the record. It helps you to be able to know the stock on hand available, and you are able to record and track your inventory. Stock surplus or deficit is determined easily. It is fast for you to determine your damaged goods, your stock surplus, or your stock deficit. It is very good because it helps you to be able to know whether there is theft on time. You are able to discover if there is theft or anything going on with your stock, and that is perpetual inventory system. The second system is the periodic inventory system. When you do something periodically, it means you don't do it regularly. So in this system, we do not count our stock regularly. We do not check on the movement of our stock regularly. It does not focus on real-time updating of stock balance. The cost of sales is not captured at the point of sales. When we talk about the periodic inventory system, your stock of sales is calculated periodically. You don't do it frequently at the point of sale. So for the periodic system, it is cheap. That is one advantage about it. It is very cheap and it is very easy to use. You don't need to calculate your cost of sales regularly. That is one advantage. But this system has a lot of disadvantage. The disadvantage there is that you will find out that you won't be able to track your goods. You are not able to know when you have a surplus or a deficit, or when goods are damaged. And that is the periodic inventory system. Now, under the periodic inventory system, you have a formula of calculating your cost of sales. Under the periodic, if you remember your cash receipt journal that you did in grade 10, you find out that immediately we have the sales, we calculate the cost of sales. That is a perpetual inventory system method. But under the periodic, you have to go through a particular format in order for you to calculate your cost of sales. And the format is what I am about to show you shortly. Now let's consider how to calculate our cost of sales using the periodic inventory system. So calculating cost of sales using the periodic inventory system, you need to familiarize yourself with this format. You start with your opening stock for the year. You add your net purchase. What is net purchase? That is your total purchase for the year minus the goods you have returned back to your suppliers. Then you add your carriage on purchases. If you are importing your goods, then you need to add your import or custom duties. Then finally, you minus or you less your closing stock for the year. Once you compute all this, what you get is what we call your cost of sales. Quickly, consider this short example on how to calculate the cost of sales using the periodic inventory system. ABC Enterprise used the periodic inventory system with the following records. The opening stock for the year is 50,000. The purchases for the year is 125,000. The carriage on purchases is 7,000. The returns to supplier is 5,000, and then their closing stock. The closing stock is 20,000. Your required is to calculate the cost of sales. So I'm just going to substitute what I have on the board on my format. Now, the opening stock for the year is given as 50,000. So I come to where there is opening stock and I put my 50,000 red. My total purchase for the year is 125,000, but we do have a return to supplier. Remember, I said what we need here is the net purchase, not just the purchases. Now, the net purchases will be your total purchase minus your returns. So I put my total purchase here, which is 125,000 rand minus my returns of 5,000. So my net purchase will be 120,000. Then do I have a carriage? Yes. So my carriage here is 7,000. Do I have import duties? No. Meaning the goods were bought locally. So there is no import duties. And then my closing stock happens to be 20,000, which I'm going to minus. Remember, whenever we put any amount in the bracket in accounting, it means deduct, minus. So once I compute all this, then what I am going to get will be my cost of sales. 50,000 plus 120,000 plus 7,000 and minus 20,000. And that will give me my 157,000, which will be our costs of sales. That is me for now. For questioning and for any queries, please reach out to me on the YouTube channel displayed on your screen, or you can reach out to me on my WhatsApp number also displayed on the screen. The next time we are going to be looking at the 3 method of stock valuation. Thank you.